Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again at euro currency. So yesterday it was really choppy period in time in session where the European Central Bank meeting has happened, some comments from the Christine Lagarde and current situation. But you can see that euro currency was not able to move any significant distance in any direction. So mostly it remains at the same point where it stands right now. And it just tells that everything was said, mostly stands according with the expectations. And now a really big question exists about this context that we have. Actually today our forum member BK asked a really interesting question. So how to treat the patterns that stand in opposite direction on the intraday chart, so particularly speaking bearish patterns. If we have bullish context on the daily, should we ignore it or what we should do in the current situation? So, and this is particular step that we have right now. On the daily chart, you could see that market in general stands above the bottom of this grabber. And in general, it stands around an area, 160, that we said that's it is normal standing for bullish context. If market will not show any deep retracement, we suggest that this is some starting of upward continuation. It's minor consolidation before continuation, and market could keep going higher. But for this, market should not drop too much, so it should not show any significant drop here. And if you trade on the daily chart, on the weekly chart, for you it's absolutely not interesting what's going on in the intraday charts, because your stop will be at the daily chart and your target also will be on the daily chart, while you could use the context on the weekly. So as a rule, these levels of the stop loss and take profit significantly wider, that could be reached by any intraday pattern. So you just should work in a time frame that you're actually trading. You should not change it. But if you trade on intraday charts, this might bring some options to you. So on the 4 time frame chart, what do we have? We have butterfly. Market has shown upward direction that we actually were counted on, but this action really not great. So it's very choppy. We do not see anything of this kind, so we do not see straightforward upward continuation to the 1618 target. Although retracement here already is done, market was able to stay above this area, but it can't get started the upward direction. And as a result, we've got the bearish grabber here on the 4 time frame chart. Actually, the same we have on hourly chart. This pattern suggests drop below the lows around 10860. So if it will reach just minimum target, it will not hurt the daily pattern. So it could happen that both patterns could work together. So first we get deeper retracement right back down to the previous lows around 10850, 10860, and then market could start moving higher and complete the pattern that we have on the daily. This is also possible. And here it depends on what you have in your pocket. So either you do not have any position. From this standpoint, of course, it's better to wait and do nothing, especially as we're coming to the payrolls report, and if you do not want directly to trade the report numbers. From that standpoint, if you see this pattern and see this type of action, maybe it is reasonable to just sit in the hands and see what will happen, because this is really choppy. This reminds mostly this type of action. It's not really very fast and strong. So it means that we could get a kind of A, B, C top D pattern, right? So this is also possible. If you already have a long position and you have taken it yesterday, as we suggested with this pattern that you could see on the hourly chart, to call what we said. Here are some kind of the hand shoulders. If market will just show this retracement, you could consider taking the long position once again if you would like to. So from that standpoint, you could either close position or move stop to the break even and see what will happen. So this is most reasonable decisions right now. Speaking about taking the short position, this is only if you're sure the market will drop on the payrolls report, because we have daily context stands bullish, and from technical point of view, we do not have reasons right now to take the short position, at least on the daily chart. On the intraday charts, yes, you could stick directly to the patterns that we have, because grabbers are directional patterns. They do not depend on the MACD indicator, so you choose the direction by the directional pattern. So when you have the trend indicator, you have directional pattern, your direction will be based on the directional pattern. So direction overrule trend. This is the Giordano rule. So from that standpoint, you could try to take the scalp short position, stops above this area and target somewhere below this level, and then also see what will happen. But this is very short-term time frame. That's why we usually do not consider it. Well, speaking about the daily time frame and fall time frame chart, how you could combine both of these patterns together, this is approximately as I just have discussed and explained. So if you have a long position, think about closing it or just move stop to the break even. If you do not have it in the current circumstances, we should not ignore it, and it makes sense to sit on the hands, mostly because of the common payrolls report. On the daily chart, because your stop and your target will be right here, let's suppose that on a daily weekly basis, if you're trading, so you use weekly chart for direction estimating, and you use daily chart for entry opportunity. So here, if you already have taken position based on the grabber right on the 30% support here, maybe it makes no sense to just change something, because you already have the stop. Your stop probably already on the break-even stance. So just you could see what will happen if daily trend will be broken down. From in this case, you will be watching for a deeper support area and control this area with the direction of the weekly MACD. So you take a look at the weekly chart and you are watching whether trend stands bullish or not, and then see when the market stands. For instance, market has reached some strong confluence support somewhere around 107.50, for example. You take a look again on the weekly and see if MACD stands bullish. This will be the next level that you will consider for a possible take in the long position. This is how it works. So for now, if you trade on the daily chart, there is no reason to change something. So because you already have the position, you have the directional pattern, and you just see what will happen. That's all. So that's what we have currently. Let's see what we'll get on the payrolls numbers and see what will happen. Because currently, if you take a look at the other markets, well, in general, they are supportive for a bullish performance, because on the dollar index, you can see that market gradually is erasing the bullish grabber that has been formed. So you can see on the weekly chart of the dollar index, market is dropping here, erasing this directional pattern. And if you take a look at the 10-year bonds, they are dropping also. And yesterday it has dropped slightly lower, so below 4.3 right now, at 4.28 approximately. This performance is of course stand in favor of the dollar weakness. So decreasing of the yields stands in favor of dollar weakness and support the euro currency. So that's why, depending on the payrolls, I'm not exclude the chance that still it might be some occasional jump up. Here is upward breakout, but unfortunately, I just do not want to talk about this, just because we do not have any tools or some real 100% patterns that could point this with this 100% probability. That's why I just can't say that's definitely will happen. So that's actually what we have. Let's keep watching.